Assalamualaikum warahmatullahi wabarakatuh. We from Bertam Alliance Berhad want to present about corporate governance and audits of the company. Me, Nur Fatmawati and Siti Aisha be the leader for this case. This is our other group members.
First, we look at the concept of good governance practice in Malaysia, including the CARE, Comprehend, Comply and Report approach embodies in Malaysia Code on Corporate Governance MCCG 2021. First, comprehend. In the company, there is a vision and mission that ensure long-term sustainability. Therefore, the board should understand and incorporate these dimensions into their core decision-making process to ensure that the company can operate successfully and sustain growth. Second, apply. The board should consider the company's operating environment, the size and complexity of the organization, the nature of the risks and challenges it faces while implementing effective corporate governance standards. Third, report. Corporate governance disclosure should be reviewed as an opportunity for companies to show to stakeholders that they have comprehensive and effective governance framework. They should be transparent about how they use the MCCG practice. Next, we look at the good governance practice in Malaysia. First one is position of Chairman and Chief Executive Officer (CEO) needs to be held by a different person, and the Audit Committee, Nomination Committee and Remuneration Committee should not be held by the Chairman of the Board. This is to ensure that any decision making is not influenced by the highest authorities. Second, board structure or composition. The board's composition should be changed regularly and also review the tenure of each director. This control is under the Nomination Committee to ensure that the company meets the requirements of MCCG. The period for the board and tenure of the independent director to hold the position in the current companies is 9 years. If the board holds more than that, the company should justify its action and seek approval from shareholders via a two-tier voting procedure. For the tenure of the independent director, they can continue to serve on the boards as a non-independent directors. Next, the Audit Committee. As stated in MCCG 2021, the chairman of the board should not be the chairman of the Audit Committee, and the Audit Committee should be held by independent directors. A former partner of the listed company's external audit firm must wait 3 years before being selected to the Audit Committee, according to the Audit Committee's rules. As we know, the United States of America (USA) did not follow or adopt the Corporate Governance Code from the United Kingdom (UK). They used Sarbanes-Oxley Act of 2002 to control the company's bill in the USA. The function of Corporate Governance Code UK and Sarbanes-Oxley Act US are different ways. Therefore, we will look at the different ways both will act if applied. First, approach. The Corporate Governance Code use principle-based, while Sarbanes-Oxley Act use rule-based approach. When the USA use the rule-based approach, all the companies built in that country are required to follow the rules without distinguishing small, medium, or big companies. But for the Corporate Governance Code, it is only applicable for listed company, but for non-listed, it is encouraged to adopt. Second, authority boards. The Audit Oversight Board (AOB) is responsible for audit oversight and ensuring that Malaysians have trust in the quality, reliability of audited financial statements. It was established under Section 31C of the Security Commission Act of 1993. But in the USA, the Public Company Accounting Oversight Board (PCAOB), created by the Sarbanes-Oxley Act, is to supervise public company auditors to protect investors and the public interest by fostering transparent, fair, and independent audit reports. Last one is penalties. For Sarbanes-Oxley Act, if the companies did not comply with the Act, the penalties are 20 years imprisonment and fine $5 million. For corporate governance, there are no penalties for the company who did not comply with the code, but the company needs to disclose why they did not apply the code.
The board composition effectiveness according to the Malaysia Code Practice. For the Practice Note 1.1, the Bertam Alliance has applied the practice where their director has set the business direction and oversees the group's conduct based on the group periodic performance as supported by management. The effectiveness using this practice is the group's abilities can to continue as a going concern. Next, practice 1.3, the position of the chairman and the executive director should be held by distinct people. This practice has been adopted by the company where the chairman is Datuk Muhammad Asad, while the executive director are Mr. Lim Yong Fok and Mr. Shu Bung Shin. The effectiveness using the practice, we can see that the chairman is responsible for ensuring the board effective conduct and performance in order to achieve its objective, while the executive director in charge of managing the company and the group as well as implementing operational and corporate decision. Thus, is to avoid conflict in decision making. Furthermore, to practice 4.1, at least half of the board must be composed of independent director. As we know, the Bertam Alliance now consists of 5 members. Effectiveness using the practices, we can see that the company has present the balanced and effective organization. Thus, the board decisions are made objectively in the best interest of the firm. Lastly, practice 8.1, where the chairman of the audit committee must not be the chairman of the board. As we know, the chairman of the company is Dato' Muhammad Asad. Meanwhile, the chairman of the audit committee is Mr. Hui Jun Han. Use the effectiveness using the practices, the board can objectively assess the audit committee findings and recommendation, because the role of board chairman and chairman of the audit committee are held by distinct people.
Based on the mission and the vision of the case organization, the MCCG 2021 update introduces the best practices and the guidelines to improve board policies and processes, including those related to the appointment, nomination and the director selection, and also to strengthen board oversight and integrate sustainability aspects into corporate strategies and operation of companies, and also to encourage the adoption of best practices, especially those with relatively low uptake, as highlighted in the SCS Corporate Governance Monitor Report. Secondly, based on the Board of Directors' strategic leadership, effective leadership and the oversight by the board is sustainable because sustainability and its underlying ESG issues determine a company's ability to create lasting and sustainable value. Next, they also need to integrate the issues in corporate strategic governance and decision making because it becomes more important and maintain the trust of the stakeholders. Third, companies with a clear long-term strategies and clear sustainability plans, such as helping the global transition to the net zero company, to earn the trust of stakeholders such as consumers, investors, policymakers and regulators. Lastly, boards and business that are not prepared for this can suffer because the same stakeholders lose confidence in the company's ability to adapt to changes in the global condition. Thirdly, based on the operational implementation levels, the board effectively considers sustainability issues when monitoring the company's plan, performance, long-term strategies to maintain the company's resilience and provide lasting and sustainability value so they can maintain the trust of the stakeholders. Second, management also plays a key role in integrating sustainability aspects into the company's day-by-day operations and ensuring the effective implementation of the company's sustainability strategies and plans. Third, boards and management need to continually incorporate and take into the accounts views of internal and external stakeholders in order to get better understand and manage the risk and opportunities of the company's sustainability. Lastly, sustainability is increasingly recognized as an internal part of the decision-making process of a company's stakeholders. Many institutional investors consider the inclusive of ESG factors in the investment decision-making process as a part of their trustee responsibility.
Next is step for audit report. In 2018, auditors state unqualified opinion for Bertam Alliance Berhad. It is because audit opinion can be classified as unqualified opinion if it said that the financial statement is true and already in accordance with standard they apply in this country, which is Malaysian Financial Reporting Standard and International Financial Reporting Standard, and also it means that there is no material misstatement in the financial statement. For 2019, it is disclaimer opinion. The auditor don't express an opinion on the accompanying financial statement because of the some significance of the matters described in the basis of disclaimer of opinion section of the audit report. Also, auditor have not been able to get sufficient appropriate audit evidence to provide a basis for an audit opinion on this financial statement. And last, for 2020, auditors state the same as 2018, which is unqualified opinion that shows in the opinion paragraph. It is said the financial statement gives a true and fair view, and it means that the opinion was unqualified opinion of audit report, and also it means that there is no material misstatement in this financial report.
In 2018 and 2020, the type of audit report is unqualified because of an independent auditor conclusion that a company financial accounts are presented honestly and appropriately, with no material exception, and in accordance with generally accepted accounting rules (GAAP). In 2019, the audit report is a disclaimer opinion because the auditor were unable to gather adequate acceptable audit evidence to establish a basis for an audit opinion on those financial statements. Therefore, for this year, there are no key audit matters to highlight. In 2018, the first key audit matters issue is carrying value of inventory, property development expenditure, and land held for property development. Because the carrying amount of property development expenditure and land held for property development accounted for approximately 51% and 32% of total group assets, respectively, and the complexity in assessing its carrying amount for the purpose of measurement at lower of cost and net realizable value in accordance with MFRS 102. We have included them as key audit matters. Second issue is Practice Note 17 of the main market listing requirement of Bursa Malaysia Security Berhad. Since 4 April 2018, the company has been categorized as an expected listed user under paragraph 8.04 subsection 2 and paragraph 2.1 subsection C of PN 17 of Bursa Malaysia Securities Berhad main market listing requirement. This is a key audit issue because it is critical to the intended user's knowledge of the goods and the company's financial statement as a whole. The company is required by paragraph 8.04 subsection 3 of the listing requirement to regularize its financial position by implementing a regularization strategy to address the PN17 status. In 2020, the key audit matters issue is reliance on management expert. As previously reported in Note 17, the group invite independent valuer to estimate the net realizable value of land owned for property development. To assess the fair value of the underlying assets, the independent valuer employ industry or market-approved valuation methodologies and procedures. We have considered this is a key audit item since fair value measurement is inherently judgment and the carrying value of these assets is material to the group.
The last part is evaluate whether the type of audit report issue and the matter highlighted in the key audit matter section in prior years are related to the financial difficulty that the case organization are having now. For 2018, there are two key audit matters that are stated in annual report of Bertam Alliance. Firstly, the carrying value of inventory for property development expenditure and land held for property development. We include it to the key audit matter because the carrying amount as stated in question 2 before and the complexity in assessing its carrying amount for the purpose of measurement at lower of cost and net realizable value in accordance with MFRS 102. The key assumption of impairment evaluation in Bertam Alliance are the predicted selling price of further development project, the expected take-up rate for each development phase, and the estimated gross margin from development activities. Secondly, Practice Note 17, which is PN17. The matter is considered as a key audit matter as this is important to the intended user's understanding of the financial statement of a company as a whole. The regularization plan had to be submitted to Bursa Security within 12 months of the first announcement, which occurred on April 4, 2018. Auditor has discussed with the director and management of the company to gain an understanding of the progress of formulating the regulations plan and VSCs, that financial statement for adequacy and appropriateness of disclosure. For 2019, there are no key audits matter, but we just highlighted that the financial difficulties of the company that affect to the financial of 2020. Firstly, the ability of the company to continue as a going concern. The financial statement of Bertam Alliance show that the company incurred a net loss of 15,810,111 during the financial year ended 31st December 2019, and as of that date, the company's current liability exceeds its current asset by RM32,291,742. Further, the company has defaulted in the repayment of its bank borrowing. Secondly, valuation of inventory which are in land held for property development. The auditor are unable to satisfy ourselves as to the appropriateness of the underlying basis and assumption used by the director in arriving at recovery value of inventories for the purpose of determining their net realizable value, and thus unable to determine whether any adjustment to write down an inventory which carrying amount of 1 RM198,244,256 would be acquired. As stated in the annual report, the inventory has been decreased until 2020. The decreased inventory leads to the financial difficulty that the company is having now.